Welcome back to the 316 Investor. Today is our August 2nd, 2024 market trend updates. Right here, we were going to talk about everything interest related, a little bit of basic steps on what it's going to kind of look like for working with an agent on the buyer side of representation, some interest rates that might be pretty likable in a lot of first-time home buyers and or seasoned buyers, and why maybe possibly selling your home soon might be a good idea, and or why buying a home soon also might be a good idea. If you are thinking about getting into your first home, right now would be the time to start possibly making those transitions into preparing yourself to buy a home. And those are lowering credit card debts, lowering debts altogether, saving up for those down payments, working with the right lender and reaching out to the right realtor, and and making sure that all those things are in line for you. And so for those of you that don't know, hello, my name is Raymond Coburn. I am a licensed realtor, broker, investor, YouTuber, podcaster here in the state of Oregon. And I do residential and commercial. I love being able to help people find homes and get their dreams of home ownership, make it easy and simple, really. When you work with an agent that helps you find a home, there is a lot of paperwork, a lot of know-hows that need to happen behind the scenes to make sure that you are buying a property that you know what you're getting, right? When you go to buy a car, traditionally you look at, what does the oil say? What does the exhaust smell like, right? If the exhaust smells like a lot of gas, there might be some other issues. If it's stuck puttering, there might be issues. You take it to a mechanic so you know what you're buying, right? If there's water in the oil, it's going to be cloudy, milky looking color. You don't want to buy that vehicle. Same thing with a realtor. You're going to want to take it to a realtor slash mechanic, right? In that aspect, to help you find out, is this the home that you want to buy? Is everything good? You wouldn't just assume that this is the right house that you want to buy without working with an agent that's on your side on any percentage, and make sure that that person that realtor is trustworthy and knowledgeable about what they're looking for. However, if you are looking to buy or sell any real estate in the state of Oregon, please reach out to your man here, Ray Coburn with eXp Realty, licensed in the state of Oregon. So here, let's jump right into it. According to Fox Business News, today's mortgage rates plummet for 15 and 30-year terms as of August 2nd, 2024. And this is from their source and not from me. This is just for generalized information, just in case you might have missed it. So, how do mortgage rates work? When you take out a mortgage loan to purchase a home, you're borrowing money from a lender. In order for that lender to make a profit and reduce the risk to itself, it will charge interest rates on the principal. That is the amount that you borrowed. So, for instance, you borrowed $300,000. That is the principal. The interest is what's after that. And so looking at that side, expressed as a percentage, a mortgage interest rate is essentially the cost of borrowing money. It can vary based on several factors such as your credit score, your debt to income ratio, or DTI, down payment and loan amount, and repayment terms. Again, this is why working with a knowledgeable lender slash loan officer would be ideal. And I do have some suggestions for a couple that you'll definitely want to maybe take a look at if you haven't already. If you're not working with one, I do have some suggestions, and none that are required. But other than that, after getting a mortgage, you'll typically receive an amortization schedule, which shows your payment schedule over the lifetime of the loan. It also indicates how much of each payment goes towards the principal versus the interest. So you may see on a scale, you may see something like this, where at the first part of the payments for the first couple years, you'll see interest. Then you'll start to see that it starts to apply after a certain amount of years to the principal, the actual original loan value. So there are some tips and tricks that you can do to pay more towards the interest, while also paying towards paying more towards the principal while paying towards the interest. And in some of our master classes, we'll be covering a lot of that. So you'll definitely want to stay tuned for those tips and tricks on investment strategies. I'm not covering any of that really here. I'm just kind of going over the mortgage rates as of today, since today was, a pretty memorable day for interest rates to kind of plummet for the 15 and 30-year terms. Near the beginning of the loan term, you'll spend more money on interest and less in principal balance, as I just stated there. As you approach the end of the repayment term, you'll pay more towards the principal and less towards the interest. Because again, interest starts to go down, principal starts to go up. In that amortization schedule, you'll see that in whatever your lender sets you up with. Your mortgage interest rates can either be fixed or adjustable. With a fixed rate mortgage, the rate will be consistent for the duration of the loan. With an adjustable mortgage rate, or ARM. ARMs are adjustable rate mortgage, ARM, adjustable rate mortgage. The interest rate can fluctuate on the market. So in our master classes that we talk about on first-time home buying situations, our adjustable rate mortgages, good. That's just something that you're going to have to talk with your lender. But also keep in mind that a mortgage interest rate is not the same as an annual percentage rate, APR. This is because an APR includes both the interest rate and any other lender fees or charges. So keep in mind that ARMs, adjustable rate mortgages, or your mortgage, is separate from your APR. APR is your interest rates and any other lender fees or charges that might be included in the loan. So keep in mind just that as well. You'll have your rate, then you'll also have your APR, your interest rates. So just kind of keeping that in mind. Here's a little bit of something that Fox Business News pulled up. Again, these rates may definitely change based off of certain criterias and markers within each personal aspect on each personal situation. However, we can definitely see that that's looking a lot better. Keep in mind, rates were historically, like 1981, they were 20% or higher for interest rates in 1981. People were still buying homes. It's not like they weren't buying homes. They were still buying homes. And since then, we've seen 2.5 in the ones, in some cases, 3s for sure. And then it starts to go up. I mean, it fluctuates. It's not like, oh, it's the end of the world, I can never buy another home again because. No, that is not the situation. That is and can sometimes most likely be what I would consider a myth. Rates do not consistently stay up high. Looking exactly at 1981. If that was the case, 1981, 2024, then our rates should be in the hundreds percent, right? Because they just keep going up. No, they fluctuate, they adjust. And it's been that way all the time. So now, going back through the rates here, mortgage rates change frequently, sometimes on a daily basis. Inflation plays a significant role in these fluctuations. Interest rates tend to rise in periods of high inflation, whereas they tend to drop or remain roughly the same in times of low inflation. Other factors like economic climate, demand, and inventory can also impact the current average mortgage rates. To find great mortgage rates, start by using Credible's secured website, which can show you current mortgage rates from multiple lenders without affecting your credit score. And this is according to Fox Business News, not me. So you can definitely check out that website. I'll have this link for pointing the credit to Fox Business News for what they've done here on this article. I think it's definitely educational and very informative. What determines the mortgage rate? Mortgage lenders typically determine the interest rate on a case-by-case basis. Keep that in mind, case-by-case basis. Generally, they reserve the lowest rates for low-risk borrowers, that is, those with a high credit score, income, and down payment amount. Here are some personal factors that may determine your mortgage rate, such as location of the home, price of the home, your credit score, credit history, your loan term, loan type, whether it's conventional, FHA, USDA, VA, stuff like that. Interest rate types, fixed or adjusted. Fixed, adjusted. Down payment amount, that is a big factor. So make sure that you've saved up, your money's there and all your hard work, which is another reason why, everybody that owns a home has gone through this, right? A lot of the ideas out there is that home rates will go down. If you own, in some cases they may, and there's so many unknown factors to why they would go down. But if you're in a situation where you're saying, let's say, okay, I can still continue to make this for the rest of my life because I have X amount of money coming in and this matches X amount of money that I pay on the mortgage. I just want to have a different location. I want to maybe live from the city to the beach, or I want to go from the beach to the desert, whatever the situation may be. Those persons that own those homes, they go through this. They go through this criteria every time. It's hard work. It takes money. It takes dedication. But once they own it, do you think that they would sell like bottom price? No. There is attachments that we have to look at as realtors. How attached to that property is that seller, right? So if that seller is saying, this is as much as I can really go on this house, guess what? That's kind of where the realtor would be stuck at, trying to sell that home at that price. However, on the seller agent side, it is our fiduciary obligation to make sure that we do our best in obligations wise to our client, the seller. On the buyer side, for buyer representation, it is their fiduciary duty to make sure that they find the best deal for their client, the buyer. And so when you let those two professionals meet in the middle, something beautiful happens. The seller gets what they want and the buyer gets what they want. And in that meeting of the minds, it takes a lot of negotiations and sometimes very highly skilled, knowledgeable professionals to work out the kinks. So now going down the list, interest rates, fixed or adjustable, down payment amount. Keep in mind that some lenders, such as the ones that I can suggest, also work with down payment assistance as well too. LTV, loan to value ratio, DTI, debt to income ratio. So how much debt do you have versus how much income do you have? There's a certain fine percentage there. There is a 28-36 rule that I do know of, and we can get into that when we get into our master classes. Again, it's called I believe it's a 36-28 or 28-36 rule, and we can definitely get into our next master classes, which you will want to sign up for simply by subscribing or following me at Raymond Coburn on Facebook. So I can definitely fill you in on those when we do those master classes. So, other than that, other indicating factors that may determine the mortgage rate include current economic conditions, rate of inflation, market conditions, housing construction, supply, demand, and costs, consumer spending, stock market. Why would the stock market indicate the rates? Because on a national, global level, the stock market controls where a lot of the rates are at. A lot of investors invest in real estate. That's where they make their millions and billions of dollars. I think it was last year, Forbes had an article out that said that there was 25 billionaires in the U.S. that dedicated their entire income to real estate. And I think from 2022 to 2023, the average of those 24 billionaires made an increase of $5 to $8 billion on profits just in real estate in 1 year. That is a lot of money. That is a lot of money. I mean, I would just like to have just 1 million of that. So, I mean, that is phenomenal. That tells you that, getting into home ownership, working out investment strategies and residual income, living stress-free when it comes to income, super, super enjoyable. Hard, can be sometimes hard to learn. That's why working with an experienced team, your realtor, lender, and people around you that you surround yourself with can help you get educated about how to invest in certain properties and strategies and stuff like that, whether that be residential or commercial. So Federal Reserve policies also change and impact determine the mortgage rates. Current employment rates also determine the mortgage rates. If you want to find out more about that, again, follow me on Raymond Coburn at Facebook to make sure that you are staying up to date on all of our master classes. How to compare mortgage rates. Along with certain economic and personal factors, the lenders you choose can also affect your mortgage rates. Again, let me repeat that. Along with certain economic and personal factors, the lender that you choose can also affect your mortgage rates. Some lenders have higher average mortgage rates than others. Regardless of your credit or financial situation, that's why it's important to compare lenders and loan officers. Here are some of the best ways to compare mortgage rates and ensure that you are getting the best one. Shop around for lenders. Compare several lenders to find the best rates and lowest fees. Even if the rates is only lower by a few basis points, you could still save on thousands of dollars over the lifetime of the loan. Get several loan estimates. Loan estimates come with more personalized rates and fee based on factors like income, employment, property's location. Review and compare loan estimates from several lenders. Get pre-approved for a mortgage. Pre-approval doesn't always guarantee that you'll get a loan, but it can give you a better idea of what you qualify for and what interest rates you may or may not get. You'll need to complete an application and undergo a hard credit check. Consider mortgage rate locks. Again, consider mortgage rate locks. A mortgage rate lock lets you lock in the current mortgage rate for a certain amount of time, often between 30 and 90 days. During this time, you can continue shopping around for the home without worrying about the rate change. That's pretty nice. That's pretty nice. Choose between an adjustable and fixed rate mortgage. The interest rate type can affect how much you pay over time, so consider your options carefully. Now, you may be wondering, let me just stop right here. You may be wondering, why is a realtor talking about loans? Because loans and interest rates has everything to do with real estate. Everything to do with real estate. Unless you're a cash buyer getting a hard money loan, everything to do with a realtor. Although there is very little that we can talk about when it comes to specifics on the loans, because we can't really get into that because we're not loan officers. However, it is nice to talk about, because now not only are we educating ourselves, we're also educating our clients, you, the customer, you, the buyer. So if you are looking to buy a house, again, please feel free to reach out to yours truly, Raymond Coburn with EXP, licensed in the state of Oregon, also on Facebook at Raymond Coburn. So choose between adjustable and fixed rate mortgages, your 15-year rate. Loan amount, let's say, for example, is $300,000. The interest rate would be 6.9% as an example. Monthly payments would be roughly around $25.79 a month. And this is just an example. Interest rate charges would be about $164,186 over the 15-year period. Total loan amount with the principal and the interest rate would be $464,186. This is according to foxbusiness.com, not anything from me. So just so that's out there. You can also take a look at some other rates here. So at an interest rate of 6.8% on a $300,000 loan, your monthly payment would over 30 years would be $1,974 a month, versus a 15-year rate where it's $25.79. It would be around a little bit less than $2,000 over the 30-year fixed rate. Total interest charge would be $410 on a 30-year fixed rate. Total loan amount would be $710,000 on an original $300,000 loan. So you'd be paying about $410,000 in interest. There are tips and tricks to get that out of there and pay off your loan faster prior to the 30-year fixed rate. Again, some of those tips and tricks will also be in our master classes that we do host with some pretty prominent folks in our masterclass podcast. Pros and cons of the mortgage rates. If you're thinking about taking out a mortgage, here are some benefits to consider. Predictable monthly payments. Fixed rate and mortgage loans come with an set interest rate that does not change over the lifetime of the loan. This means more consistent monthly payments. Potentially low interest rates with good credit and a high down payment. You could get a competitive interest rates. Adjustable rate mortgages may also come with a lower initial interest rate other than fixed loans. Tax benefits. This is huge. Having a mortgage could make you eligible for certain tax benefits, such as a mortgage interest deduction. That is cool. MID, mortgage interest deductions. Potential asset. Real estate is often considered an asset. As you pay down your loan, you can also build home equity, which you can use for other things like debt consolidation or home improvement projects. You can also take out that home loan and use it for other things. And so, I mean, home equity is, a really, really beautiful thing when it comes to owning homes or owning any properties. Set aside from, let's say, a rental property, continuation of income generating property, if you're able to manage it, or you hire a management company to manage it for you, you've got, while you're making income from it, you're also building equity on those investment properties. So whatever you invest, you can get out that or more possibly at the end when you do decide to ever sell. Plus, in between the years or months that you do own it, you're building up the rental income that suffices your natural income. And this is why in several of my other videos, I do say that, you can potentially, there is ways that you can supplement your 9-to-5 job with investing in real estate, buying, fixing, flipping, subject tos, all those types of things, and the BRRRR methods and stuff like that. So we definitely talk about all that stuff in our master classes. So you definitely want to make sure that you follow Raymond Coburn on Facebook to be in tune with all of our mastermind classes and stay in touch with all of that. Or you can also subscribe to this YouTube channel as well. Credit score boost. With on-time payments, you can build your credit score as well too, so it boosts it like a lot, making on-time credit payments with your mortgage. Expensive fees and interest. You could end up paying thousands of dollars in interest fees and other fees over the lifetime of the loan. You will also be responsible for maintenance, property taxes, and homeowners insurance because it's yours. It's your property, nobody else's. It's yours. You get to reap the benefits of ownership. When you have a rental, you're putting in all that money into something that will never be yours. Think of it. That's what made me and my wife want to own our own properties and our own investments for rentals. It was never ours when we were renting. And you add that up every month, year over year over year, 3-4 years, how much are you putting into something that's not yours? It's so much better when you can put it into something that's yours, that you're building on. You're building on your investment, your security there for your own home. You're also building up equity as well too. We cover all of this into our master classes. So how to qualify for a mortgage. I'll just read over it real quickly. Have steady employment and income. Review any assets. Know your debt to income ratio, DTI. Check your credit score often. Make sure that you're paying attention to your credit score, whether there's lots of ups or downs. And so let's see here. Know the property type, what type of property you're getting. Certain lenders may or may not loan with manufacturers, predated 1978s or older, or site-built homes, specific location, stuff like that. Choose the loan type, whether you're going with FHA, VA, USDA, or conventional loans. Know what type of loans those are, ins and outs of those. Ask your lender those questions and make sure that you're knowledgeable and educated about that through your lender. And let your lender tell you, what is entailed in all of that details. Prepare your upfront and closing costs. Separate from your down payment, this is your upfront and closing costs due at the time of closing of escrow. So, other than that, how to apply for a mortgage, choose a lender, get pre-approved, submit a formal application, wait for the lender to process your loan, complete the closing process. And so within this whole entire situation here, we've got rates that are, starting to come down, starting to look a lot better, right? And today, August 2nd, 2024, is definitely a pretty phenomenal day. Very positive, outlooking for a lot of buyers going back into the market. Hence the reason why me and my podcast partner, who is also a lender, that I do suggest also, has suggested that right now is the time to buy. If you want a specific house, let's say I want that house on top of that hill. I don't care what it takes. I like the price. I like the location. I want it. When a lot of buyers start to come into the market, you're going to have to compete with other people that want to buy that home just as bad as you do. And guess what that's going to do to the price? Oh, I was just asking this, but now it's up here? Okay, says the seller. Now you're kind of in what we call a bidding war. You don't want to place yourself in a bidding war. If you can get into a home and you're set and you're secure to get into a home and to buy a home right now, would probably be the best idea to do so. Um, Me and my wife, we didn't get into, ideally best interest rates, but when the rates do go down formidably better than what they are when we locked in, we have the option to refinance at a better rate and still maintain all of our equity. So, with all that being said, today's mortgage rates plummet 15 and 30-year terms, August 2nd, is your update. If you would like some more information about how to buy, or if you are looking to sell any of your properties or real estate in the state of Oregon, please feel free to reach out to me. My name is Raymond Coburn with eXp Realty. I am licensed in the state of Oregon. Phone number is 949-891-4426. Again, that's 949-891-4426. I look forward to helping you find your dream home and or sell your home for the best price and make the whole entire transaction simple and enjoyable on both sides. Have a great day, and thank you again for tuning into the 316 Investor.